historically, the sort of like if you were to do benchmark analysis, take Cambridge, benchmarks, and you said like, what's the disparity between like upper quartile performance and lower quartile or median? Then the disparity, like in the early days of older vintages, in the early days of my time at Greenspring, for older vintages at that time, it was like, oh my God, like you cannot, you have to be in the upper quartile, right? And you were just completely running away. And there's been a lot of compression in that, now. And so it's a number of things. I mean, brands are still relevant, strategies are still very relevant, track records still very relevant. But you do now have, I think, much more creativity in terms of how people are approaching being differentiated. I don't think it's a coincidence that Silicon Valley banks to the wine industry and to venture capital, because I think that like they're the equivalent in terms of kind of doing, mostly the same thing. Like, what's the story? Because you don't know what the returns will be in the fund, right? You can never invest through the front mirror or through the front windshield. You invest at the back. And so, there has to be compelling stories, and certainly being in the top quartile consistently is very compelling. But when the compression happens in those returns and you don't know what the fund will be, then the story becomes more relevant. And so what you've started to see is firms that are actually like paying more attention to a differentiation story that isn't just about, performance. And I think we're now living through a period where those stories are kind of getting a little bit tired to the extent that they don't use technology somehow, right? So let me give you an example. Like, you're talking to somebody from Bain, and he was, he's largely agreeing. He's like, you hear managers and you're sort of like, well, what makes you different? It's like, well, we've been investing together for 15 years. And it's like, that's not that different. So is everybody else. Like, I just had 5 people in here saying that. Well, we have access to like unique deal flow. Well, what is it? Well, it's proprietary. Okay, well, if you can't really tell me, it doesn't really seem like you do. And so that for a long time, the market got away with that, like as differentiated. It's not. It's just not.
It's
right.
Not, no.
And so, like now people are starting to use technology to actually differentiate in terms of how they find things and how they make investments. But here's the real thing about how they provide customer service to their investors. And for me, that was always the thing, obviously being on the LP side, where it was like, yeah, man, I mean, it just kind of is weird that like I can log into like my brokerage account or my 401k account. I can see like, everything about the money that is in there. And yet like we've committed $50 million to this fund. And I'm having a hard time getting a response to like, get a quarterly report, And so the competitive dynamics, we bet that they would always sort of start to head to a point where differentiation was better found in technology. And that's happening, to your point now. And that's where all the companies are coming from to take advantage of. And there's so much consolidation now happening. But the fundamental driver is that firms are actually buying more and more technology, because it's like Schwab. Like, I got a notice the other day, and Schwab was like, oh, we're now integrated with like your Google Home. So you can like, hey, Google, like, what's, my Schwab balance? It's like, no one wants to do that. But guess what? They have to differentiate and appear to the, it's a B2C model mostly, right? So they have to appear to the consumer as though they're like keeping up with the thing. And now that's more and more important in B2B in this market, is show your LPs that you're actually sort of providing customer service and experience, and that it's technology enabled, because that's a compelling story. Sorry, you
Absolutely.
wanted to jump in a couple times, and I just
not
I get very
problem.
passionate about it.
I love it because I think it's one of the most important aspects of the aesthetics of how you interact with your clients when you are in the money management and service business. And oftentimes, many emerging managers forget that in the end, no one gives a shit about the glory stories or the unicorns. They just want to have you made me money. That's what matters in the end. Like, but you can do that in a very nice, sympathetic, unique way. But we are also managing capital for a living. So the ability of communicating the right way with credibility and providing a good level of service. I've always, my former manager, at Funders Club, and now he runs a company called CodeCov that I was an angel, and then subsequently we invested it through one VC, and he says I made a mistake once, and I sent like something with an error to an investor, and I got called out, and I remember vividly that moment. He was like, "Look, people here, when we're doing things, they need to feel like we're changing the world, and also give them the credibility that their money is with Goldman Sachs. Like that's what I think." So he said something of that of those lines, but I don't know if like any of these investment banks have that much ethical credibility. But yeah, every 6 months there's someone doing something weird.
Yeah.
But overall, I think that there's a level of integrity, right? That you trust. It's like if your money is in Chase, like or it's going to be there. And then some of these firms, they're really weird black holes, and a lot of the managers continue to be able to get away with that because there wasn't enough competition. And now, for me as a founder, because I am an investor, but of course I consider myself an early stage founder.
Yeah,
more
like
than
you
also
didn't
just a
come
VC.
through that Harvard Business School path, and all you've ever done is make investments. Yeah, totally. And I love that type of investor, by the way.
Well, thank you.